This could be the very last chance for you to get on the housing ladder in the UK. Back in the 1990s, we saw average house prices about 3.5 times average salaries. Latest statistics show at the end of 2024, the average house price was 7.7 times the average salary. So this is a big problem for affordability. In fact, in 2021, when we had the unexpected boom in property prices during the COVID years, it actually went up to 9 times the average salary was the average house price in the UK, which is absolutely crazy. Now, obviously, prices have come down a bit since then, and also because of inflation, we've seen wages also go up. So things come a little bit back more in line. However, my thought here is it going to be possible for the average person to get onto the housing ladder? So let's think about what's happening in the UK property market right now. First of all, we have massive uncertainty, and it's a buyer's market. That means there are more people looking to sell than there are looking to buy. So why is that? Well, first of all, most investors are sitting back and waiting to see what happens. They're waiting to see what happens with the renters' rights bill. They're waiting for interest rates maybe to come down further. So they're waiting. And also during the summer months, it's normally quieter anyway. My personal prediction is I don't think most investors will get back into the swing of things this year. I think they'll probably wait till 2026 when they're hopefully interest rates might be lower. Now, if interest rates do come down, I think a lot of people will come back into the market, then there'll probably be another surge in property prices, and actually we might see that ratio of property price compared to salaries go up even higher than the current 7.7, which then again makes it less affordable for people to get onto the property ladder. So let's talk about this. How can you actually get onto the property ladder in 2025 and 2026? When anyone comes to buy a property, there are 2 considerations they need to think about. One is, how much deposit are they going to put down? And also, can they afford to get the mortgage? Now, if someone's buying an investment property, they generally have to put 25% deposit down, which based on the average property price, almost 300,000, is quite a big chunk of cash. However, if you're a first-time buyer, normally a 5 or 10% deposit is sufficient, and there are now some lenders who are actually offering 100% mortgages as long as you've been renting for a period of time and got a good track record, which means you don't really have to put a deposit in. Of course, there are still some costs you might have to pay to stamp duty, depending on the price of the property. You're going to have to pay legals and various things like that as well. But the point is, if you're buying a property, you don't have to put as much deposit in if you're a first-time buyer than if you're a property investor. Now, the way most people actually fund their deposits is often by help from a family member. The bank of mum and dad, or maybe they inherit some money from a grandparent, and that's often the deposit they use to buy the property. The more deposit you can put in, the better, because generally the lower the interest rate you'll have on your mortgage. So let's talk a little bit about mortgages. The most important thing when you're buying a property is the affordability. The mortgage company want to make sure you've got enough not only to pay the mortgage, but all the other things that you need to pay for when you're a homeowner. Things that maybe you haven't paid for if you were just renting a property previously. You've got to pay for the upkeep and maintenance of the property. You've got to pay for your local council tax. You've got to pay all the utilities and all the bills. If someone's been living in an HMO, for example, a house of multiple occupation, that's where the landlord includes all those bills. And I think some people don't realise just how much it actually costs if they're living in their own place and they've got to pay all the bills as well. So the lenders are very conscious to make sure that people can afford to pay the mortgage, because obviously if they can't afford to keep up their mortgage payments, there's a risk of them being repossessed. And nobody wants that to happen. So that's why lenders are quite strict on making sure the borrower can afford to pay the mortgage. Now, obviously, they're going to take personal income into account. If you're in a couple, they'll look at combined income and they'll have a multiplier of that. But with these house prices, at the moment, we're seeing 7.7 times the average salary. It brings this question of affordability into account. And that's why more and more banks are increasing the multiplier that they will accept. Now, obviously, if interest rates do come down further, that's going to help because it makes it more affordable. You need to have less income to be able to make the payments if you're paying a low amount each month. This is probably why many people like to fix their mortgages, because at least they've got the certainty they know exactly how much they're going to be paying each month. Now, when you're also buying a property to live in, there are two types of mortgages. Most lenders would like you to have a repayment mortgage, where over maybe a 20, 25-year mortgage, each year you're paying some interest, but also you're paying a little bit of capital off the mortgage. So over time, the amount you're paying comes down, so that the point is at the end of the mortgage, you've actually completely paid it off completely. That's a capital repayment mortgage. However, to make it more affordable, a lot of people have what's called interest-only mortgages. So they might have the same length of the mortgage, 25 years. They borrow, let's say, £200,000, and each month they're paying interest. Now, because they're only paying interest and not paying capital, they're paying less each month, which in theory is good. But the problem is at the end of the 25 years, you still owe the £200,000 you initially bought. Now, the good news about this is that over those 25 years, that property has probably doubled and probably doubled again in value. So maybe it was £300,000 now. With 20, 25 years of growth, it could be 600, it might even be £1 million. And yet the original mortgage was only 200,000. So in theory, there's a huge amount of equity in that property. So to clear the mortgage, all you'd have to do is sell the property or refinance to another lender. The problem is if you sell the property, well, then where are you going to live? Because as well as your house going up in value, every other property has also gone up in value. So it's really important to kind of get your foot onto the property ladder. What people normally do is they start with one property, and the first property you live in is probably not going to be your dream home you're going to live in forever. You've got to work your way up the property ladder. And as time goes on, you get one property, get your foot on the ladder. Over time, as you earn more and maybe save more money, you can upgrade to a bigger property. A great way to move up the property ladder is to find a property that needs some work doing to it. You do the work, increase the value, you then sell that property, and remember, on your own home, at the moment, there is no capital gains tax. So you can live in a property, you can do it up, sell it, pay no tax. However, there's been rumors in the press that the government and the Treasury, who are desperate to earn tax, are looking at introducing a tax when you sell your own residence on properties over £500,000. Now, that might not affect you on your first one or two properties, but as you move up the ladder and as property prices generally go up, there could be a chance you might have to start paying tax on the money when you sell your own home, if it's above a certain value. So that slightly stops people moving up the property ladder. And I think what's going to happen is people might buy a property and just hold it in their family for generations. So people will start living together maybe, and this is a way that people avoid paying the extra tax. I do think some of the policies that are being suggested by the Treasury and the government are running with smack of desperate measures to try and bring tax into the government coffers, which are much needed, because unfortunately they've not got their budgeting right and they're spending too much money. And unfortunately, they've not been able to stimulate the economy, which is the best way to bring in more taxes. But some of the taxes they brought in actually hamper the economy. Things like increasing the amount of national insurance that employers pay. That has affected a lot of businesses where they're employing people on very low salaries, they're not making a lot of profit, and suddenly they're paying all this extra tax. It's not a great thing, unfortunately. So it just shows how government intervention can massively affect the property market. So if you know anyone who's looking to get onto the property ladder, I highly recommend you share this video with them, because there's important information they need to be aware of and they need to understand. And actually, in the final part of this video, I'm going to share a new way that people can get their foot on the property ladder without having to put down a huge deposit and also without having to get a mortgage. But in the meantime, if you like this video, please do like it, subscribe to the channel, and make sure you hit the bell icon to make sure you get notified anytime we bring out a brand new video. So what's this new way of people getting onto the property ladder? Well, it's not actually very new, but the concept might be very new to most people who think the only way they're going to get their own home is by saving a big deposit and being able to get a mortgage. Now, one of the challenges is sometimes people manage to save that deposit, or maybe they've got a gift from a family member, but it's just this mortgage is the problem. And they want to get on the property ladder now because they know if they wait too long, by the time they get around to it, the price is going to be even higher. So I want to share with you a strategy which we use as property investors to control property without having to get a mortgage, without having to put a big deposit in, but actually homeowners, first-time buyers can also use this. And this is where they become what's called a tenant buyer. So they find someone who's got a property that they want to sell, but they don't necessarily need to sell it now. They don't need the money now. And then you can enter into an option agreement. It's a purchase option agreement that gives you the right to buy that property at some time in the future, but you fix the price today. Now, it might be today's market price. It might be slightly higher than today's market price, but that's okay, because as long as you have long enough on the option period, 3, ideally 5 years, the idea the price that you can buy at has locked in the price, and hopefully it's going to be a higher value by the time you come to buy, and yet you get to buy at the price you've agreed. So you might have agreed to buy at 250,000, it might well be 350, 320,000, but you get to buy at the 250 price you originally agreed. This is great because it locks in a price for you and you get instant equity in the property the day you buy. So that's a really good position for you to be in. Now, this is really advantageous if maybe you can't get a mortgage right now. And there are 3 reasons why that might be the case. Maybe you've had a little blip on your credit report and you can't get a mortgage right now, but given a bit of time, that will drop off the credit report and you'll be able to get a mortgage in order to buy this property. Or maybe you've not been in the UK long enough to have a track record. You have to be in the UK really 3 years in order to be able to get a residential mortgage, and you might be a really high paid foreign doctor who's earning lots of money, but you just can't get a mortgage because you've not been in the UK long enough. Or maybe you're a trainee accountant, trainee doctor on a low salary right now, but in a few years' time when you qualify, your salary is going to double or even triple. Then obviously you'll be able to afford the mortgages to buy the property you want to buy. So this is the point. By using these lease options, becoming a tenant buyer, where you move into the property, you treat it like your own home. So if something goes wrong, the handle breaks on the door, you fix it just as you would if you're a homeowner. You pay a fee each month to the owner, then you look after the property like yours, and then basically within that time frame, you've got the right to buy the property if you want. Now, the great thing is you don't have to buy. You can walk away if your plans change, if you don't want to buy. You generally put down a little bit of getting started money, typically £5,000 to £10,000, just to show you're committed, and then that comes off the end price when you buy. If you walk away, you lose that. So you need to make sure you're serious about buying this property if you're going into this kind of arrangement, but you have the flexibility to buy or not to buy. Now, I'm going to be doing a lot more videos about this on this channel. So if you know someone who's looking to get onto the property ladder, looking to buy, or maybe that's you, make sure you share this video with other people because you're going to want to hear about this. I have a bit of a goal, which I will explain and share in a few videos' time. A big goal I have to help a lot of first-time buyers get onto the property ladder. Why am I doing that? Well, often we as property investors get a lot of flack, get a lot of a hard time, particularly in the press, from landlord haters. Landlords are taking away the opportunity for first-time buyers to get on the market. And whilst maybe some properties that's the case, the kind of properties that I buy to rent out are not the kind of properties that first-time buyers would want to buy anyway. Now, as a landlord and investor myself, I want to help as many other people get their foot on the ladder as possible, because I think it's about time we change this rhetoric which is anti-landlord, but also the more first-time buyers buying, that's going to help the market generally, and we're all going to benefit. So if you like this video, please like it, please subscribe, hit the bell icon, and come and comment below if you're looking to get your foot on the ladder. Look out for future videos on this YouTube channel. As ever, I encourage you to invest with knowledge, invest with skill.